Hey everyone, in this video I'm going to answer if Polestar stock is a buy. I'm going to use my simplified 6-step framework, so let's get right into it. The first step in my framework, I like to consider the customer value, and for Polestar, revenue has been increasing from 92 million in 2019 to 1.3 billion in 2021, a whopping increase. Of course, the company is just ramping up production. Customer demand has been robust. It sells electric vehicles on the higher end of the spectrum with longer range. That's their focus, is to provide longer range. And one of the reasons why customers hesitate to buy EVs is because of their range anxiety. They fear that they're going to run out of power in the middle of their driving, and it's not as available to find a charging station. So that's the solution that Polestar tries to provide. And it holds a net promoter score of 36. Of course, net promoter score measures customer loyalty. And if we look at the scale here, an NPS of 36 is great. Moving on to the next step of my framework, I look at unit economics. And in the 9 months ending September 2022, gross profit of 57 million on sales of 1.5 billion. That is not great. That's extremely low of a gross profit margin. I understand the company is just ramping up production and it's just getting into economies and scale, but for now, very low unit economics for Polestar. The next step in my framework looks at the total addressable market. In other words, what's the opportunity in front of this company? And, you know, worldwide car sales grew to 67 million units in 2021, according to Statista. And you might imagine people pay tens of thousands of dollars, upwards to $100,000 for cars. And so this is a massive market opportunity ahead. The next step in my framework looks at competition, and Polestar faces Tesla, Rivian, NIO, and many others that are launching electric vehicles across the price spectrum. Launching EVs is extremely popular right now. Many companies are jumping on the bandwagon, and for now, the competition is mostly on the supply side, meaning that demand for EVs outstrips supply. Many of these companies have backlogs of orders to satisfy. So the competition is in being able to secure production effectively to earn a profit margin, right? You can pay higher prices to get your production up, but then you're going to crimp your profit margins. So that's where the competition is, in securing enough supply at low enough prices to get production up to satisfy your customer demand. And looking at valuation, and I did valuation a little bit differently for Polestar. I looked at the price change for EV stocks and its competitors going back, as long as I had data on for some of these companies, because some of them are newly public. And looking at, Polestar, NIO, Rivian, and Tesla, Polestar's stock is down the most out of the four. Polestar's stock is down 56.77% going back to earlier this year, whereas NIO is down 46%, Tesla's down 32%, and Rivian's down 14%. They've all experienced declines, and if I went back further, you would see bigger declines. They're falling out of favor with investors right now. There was a lot of hype during early and middle and late 2020, and then early and middle 2021. But towards end of 2021, these stocks started falling out of favor, and so valuation is off their highs, significantly off their highs, as this hype is getting taken out of the space. And the final step in my framework, I'm going to look at risks. And the risks here for Polestar is that supply chain disruptions, of course, much of its production is done in China. Supply chain disruptions there could hamper its ability to meet the robust customer demand. And if it cannot meet its own customer demand, there's a risk that these customers will flock to the next competitor who can meet that demand. All right, now that I've looked at each step in the framework, let me give it a grade. For customer value, Polestar gets an A. Unit economics, they get a low score, a C. They're not delivering anywhere near robust gross profit margins. Total addressable market is massive. They get an A plus here. Competition, they get a C because even though it's not customer demand is robust, there's still a lot of competition to secure labor, manufacturing, supply, and all of that to meet the customer demand. That's why there's such a shortage between demand and supply, is because there's so much competition for supply right now that there's many shortages of all types of materials and labor. And then risks, I gave it a C plus, another low score, and valuation also a C plus. The company is not profitable on the bottom line, nor is it generating robust free cash flows. I can't use the price to free cash flow or the price to earnings ratio. So for that reason, I'm going with a C plus. All right, in the next slide, I'm going to answer, is Polestar stock a buy right now? And the answer is no. Polestar stock is not a buy right now. The highly competitive environment to secure supply, along with the very thin and non-accelerating gross profit margins and operating profits and profits on the bottom line, for now has me say that Polestar stock is not a buy. We're gonna wait. We're gonna need to wait to see a few more quarters of scalability, a few more quarters to see where the macroeconomic environment goes, and we'll see if Polestar makes solid progress over that time, and then we can change our recommendation. So for now, Polestar stock is not a buy. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.